Hey, good morning and welcome to the City of Brentwood's monthly webinars. We'll get started here in a minute or two, letting people join on, and appreciate your willingness to join in as we talk about accessing business loans. Just give it another minute here. We still have a few people joining, and we'll get started, and we'll be done. These webinars go no longer than 1 hour, and we'll have opportunities for questions, and we'll talk about that here in a second. We'll go ahead and get started. Good morning. My name is Darren Gale. I'm the Assistant City Manager here with the City of Brentwood. And these are our monthly business workshops, webinars that we're hosting virtually. And each month we're talking about some type of issue that small businesses are dealing with. So the City of Brentwood, as you know, we're here in the Far East, Contra Costa County. And we have many small, mom and pop home-based businesses. And the purpose of these webinars are to provide some foundational information. So as businesses are looking to grow or businesses are looking to start, that's, we're providing them some information. So last month, we had a great presentation. And this month, we're going to talk specifically about banking and SBA loans. Next month, we're going to talk about really like business banking basics. We're going to have a couple different banks and a credit union talk about, what you even need to do as a business owner to start up a business account. And then we're going to talk about the ABCs of finding the right space, right? Are you working out of your home and you want to get into a place? We're going to talk about that, and then the marketing on the budget. And all these workshops are you'll be able to find on the city's website. Let me change it. So this is the website where you'll be able to find last month's webinar, and in about a week we'll have this one coming up. So I wanted to first introduce the City of Brentwood's Economic Development Team. As I said, my name is Darren Gale. I'm the Assistant City Manager. On here today we have Ricardo Noguera, our Economic Development Manager. If you want to jump on and say hello, Ricardo, if you're there. And
hello to all our friends in Brentwood and beyond.
And then finally, we have Abraham Salinas, who's out of training, but is available. Our staff is bilingual in Spanish. And if you ever have a question in Spanish, please don't hesitate to give us a call, or any other language. We'll find the right person to come in and translate for you. So at this time, I'd like to get into this month's program. We have two great presenters. First, we have Eric Ng. Eric Ng is a graduate of UC Berkeley, and he's also Go Bears. He's also has his MBA, and born and raised in Hong Kong, and then moved here to go to college. And although he has a technology degree, he works in the financial banking industry and has worked for a number of some of the larger institutions here in California. and currently works for Fremont Bank and has been there for about 7 years. And then finally, our second presenter, we're grateful that the District Director of the U.S. Small Business Administration, the SBA, was willing to join us. We have Chris Horton. Chris Horton has experience both in the public and the private sector, has a degree from UC Santa Barbara, and grew up down south between New Orleans and Texas. And our thoughts and prayers are with his family as they're dealing with the hurricane that went through there. And we're excited to have both of those presenters for us today. So at this time, I'll stop sharing my screen, and I will allow Eric to take over from here. As I mentioned, if you have any questions, just go ahead and raise your hand, and maybe we'll stop. We'll definitely have time at the end for questions, but go ahead and feel free, raise your hands. I'll open it up so that you can ask the question. And there might be times that Eric might want some feedback from you too. So I'll turn over to you, Eric. Go ahead.
Hello, thank you, Darren. Chris, nice to be with you on this presentation. So for my presentations, usually I go to like a lot of the chamber events. So if it was with a crowd of audience. So there are some questions that I will pose in each of the sections. And so I may turn it to Chris or Darren and see if you guys can take a shot on those questions. And Chris, feel free to jump in if you have any opinions or additional information you want to share with the audience.
Will do.
Okay, let's get started. So here. All right, first question I want to start with warming up. So what's the full name of SBA? Darren, do you want to take a guess?
Yeah, it's U.S. Small Business Administration.
Correct. And this part, I think it's the best for Chris to introduce SBA, like the role and like about the history about SBA.
Sure. Yeah, we celebrated our 70th anniversary last year. The SBA is really a resource partner. So what we are is to provide, the tools, the resources, the information, access to subject matter experts for the entire business life cycle. And when I say the business life cycle, what I want folks to think of is, you're in ideation, right? I have an idea of a product or a service that I can monetize. And from that conversation, what we can do is really identify, is this a lifestyle business or is this going to be a legacy business? And the difference between those two is really, I have a 9-to-5, that's my primary source of income. And then I have this, side job that I do or idea that I'm doing. Legacy is that you're trying to grow something that you can leave for the next generation. The next phase of the business life cycle, we provide technical assistance and tools and resources when you want to start your business. You've made a decision, you're going to move forward. You need some help with a business plan, seeking financing, business structure, HR, marketing, e-commerce, and all of that. So then we help you with that. Then you're going to have different needs when you're in your growth phase. And so SBA has resource partners and community partners that can help you as you're going through your growth phase. Then you're going to get to the next phase where there are going to be different needs at that point in that stage, which is you are a mature business. You have sustainability, and you've scaled. And then we have different tools and needs that you're going to need in the final phase, which is you're going to transition and you're going to exit the business. So a succession plan, exit strategy, business valuation. And so that's what the SBA is. We are a one-stop shop for the small business, for all things small business. And there's a lot of other things that we do, but for the sake of this conversation, that's what's relevant for you to understand about this organization called the United States Small Business Administration.
Thank you, Chris. So a lot of people, the first idea is SBA, it's only for lending, right? Helping people to get money. And a lot of times people ask me, like, how much money does SBA have for lending? So I know my answer is a little off because my slides was created before COVID. And so SBA do not usually have money for lending, and their lending program is a guaranteed lending programs that partner with banks or other non-bank financial institutions. And SBA's role is providing a guarantee. Most of the time, it's the financial institutions' money that lending out. And in case if there's any loan loss, then SBA will provide a certain level of loan loss repayments back to the institutions so that the overall risk level for banks will be lower. And that will entice financial institutions to make more riskier lending than their usual conventional policy is. That was my general understanding before COVID, but during the COVID times, we have EIDL. So Chris, were you able to explain a little bit about SBA's role like during that time?
Sure. Yeah. I mean, it's really simple, folks. SBA's role was first responder, right? We have to provide resources to help maintain and sustain small businesses. And I want to be very clear. So we say the word small business, but there's also two layers below that. There's the micro and the mini micro businesses as well. That's businesses where there's, one owner with a couple of employees, not making any more than, in a range between $50,000 to $100,000. And so, mom and pop owner operators needed economic disaster injury loans to be able to sustain the loss of their revenue, when you had the shelter in place and social distancing. And so SBA was providing these disaster loans at extremely low, below market rate interest rates to be able to make it viable for folks to get funding for their operational expenses and to maintain operations. And then we had something that was called the PPP, which is our Paycheck Protection Program, where we were providing funding that started off as a grant that could get converted into a loan. And there were some ways you can go about that. But the purpose and the nature of it was to provide some funding that was in the form of a grant that covered the cost for you to maintain keeping your staff on payroll, so you didn't have to lay them off because you weren't generating enough revenue to cover operating expenses and pay for payroll. So that was SBA's role during the pandemic.
Chris, just one question. When you say small business, federal definition, is that 500 employees or less?
That's the standard, and we have a scale. It depends on industry, so we can go all the way up to 1,500 being considered a small business, but it's just depending on the NAICS code and the industry.
Great, thank you.
Great, thank you. All right, so the two most common SBA loan programs exist, and a lot of the banks participates. It's number one is SBA 504. It's a long-term asset purchase. For example, it's a long-term equipment like a printing press with a lifespan of 40 years, or a commercial real estate that will last for 25 years or more. So those fall into the SBA 504 program. SBA 7A is where the flexibility, and a lot of banks will be participating in, but there are different guidelines because of their why purpose that it can support. So SBA 7A generally it can support the following, like start up a new business, purchasing a business expansions, capital expenditure, meaning that you are trying to buy new equipment, real estate purchase, permanent working capital, or refinance existing business loans, or pretty much any other legitimate business use. It can be covered by SBA 7A program. Chris, do you want to add anything?
The only thing I look at when I see this list here is the one where it says refinancing existing business loans. Just want to be clear for folks, there has to be something called a borrower benefit. We're not supporting financial institutions refinancing loans for the sake of just refinancing it to take a loan from one financial institution to a new financial institution. There is a borrower benefit for the purpose of that refinance. So just want to throw that out there for folks for food for thought for you to know.
Sure. Yeah, to expand a little bit more about that, it's pretty much if you can save 10% or more of your payments, or your existing loan having a balloon payments that SBA deems to be not reasonable, then it can be refinancing using the SBA 7A program.
And Eric, we have someone who raised their hand. If you don't mind, can I allow them to
Sure.
ask a question? And if you have any questions, go ahead and you can chat, type them in too, and we'll do our best. Bailey, if you unmute yourself, you can ask your question. I saw you raise your hand. Go ahead, Bailey. And we're not hearing you yet, Bailey. I see that you unmuted. Yep, we're still not getting it. Still not getting it. Bailey, if you go ahead and type in the question in the chat, we'll make sure that we answer it there, okay? Keep going, Eric.
Okay. So usually I would ask, like, can you name one advantage of SBA loan versus conventional loan?
I'll tell you what I tell people, less money down.
Perfect. So benefits of SBA loans, low injections, low down payments, usually longer terms. Give you an example, a lot of the equipment loans that banks support, it's only go for 5 years, maximum 7 years. But generally, SBA support 10 years loan terms for equipments. Rate is limited by SBA. So there's a cap that SBA will put in so that lender cannot charge more than that.
And Eric, the question that Bailey was going to ask was, are the 504 loans available for real estate purchase?
Yes. So 504 is mostly for equipment, long-term equipment or real estate purchase. And usually it's two-part. 50% is the SBA CDC originated loan, and then 40% is a bank loan. So it's a combo two loan structure. I'm sorry, 50% is the bank portions, 40% is the CDC portions. So usually bank has the first lien position, so it's less of the risk for the lender. And 40% is the second position, so SB bear more of the risk in that case.
And Eric, can that be for investment properties, or does that have to be like an owner operated?
It has to be owner operated. So it has to be at least 51% of the rentable space is occupied by the operating business of the business. And the business cannot be passive incomes coming from like leasing the space to someone else. There are some borderline business that on a case-by-case basis, like for example, if you're operating a co-working space, that your primary function is providing space for smaller business, providing marketing service, then those may be eligible, but those we need to be like examine the business model a little bit more. But if it's strictly investment property, just sitting there collecting a monthly rent, those are not qualified. Hotel does qualify because that's a rental. It's like per day basis. So
then I have one more follow-up. So say like I went out and bought a building. It's 2,000 square feet. I'm in 1,500 of it. I'm renting out 500 square feet, and now I'm to a point where I need 10,000 square feet. What happens to me as you know, I'm borrowing money that I want to move out of that facility and now go to a larger facility and I want to rent it out? Is there restrictions on that loan or my ability to do that?
Usually it's I want to defer this to Chris. Chris,
Okay.
do you have
Well, it starts with the financial institution, because what you end up looking at is you have a current note on a property, and then you're looking to purchase another property. So, looking at the bank's underwriting is one thing. Looking at SBA guaranteeing that the bank is willing to transition, and you want to look at the note, the promissory note on the first is going to be replaced by, and basically, yes, you can do that where you're going to go from one property to another property. All you're doing is you're changing the asset, you're changing the collateral, you're changing the loan amount. So it would go through underwriting again, but yes, you would be able to do that. But again, it all starts with the financial institution if their credit policy would allow them to do that.
All right. So now I kind of understand the question a little bit more. For sure, you can buy another property and get a new loans for the new facility. I thought we were talking about what about the existing loan? The existing loan, if it's originated using SBA, then we are out of compliance because the property itself is not owner occupied anymore. Usually we will see if we can be financing it, going back into a conventional structure. But realistically, I would say some people, they don't really report it. And then if there's nothing happens, there's no default. A lot of people, like after 20 years in business, the loan has already been 20 years servicing, and in theory, the client needs to report. But if they don't report, it's really nothing the bank will find out, and if they continue servicing the debt, it's not going to be a foreclosure happens. It could be a technical default, but that's pretty much it is. But we try our best to help the client to refinance it.
Right. And Darren,
Go ahead,
and
Chris.
Darren, what I was going to say is the unfortunate thing when it comes to commercial lending, you hear financial institutions say it depends to a lot of these scenarios. And so I don't want folks to walk away from this conversation looking at Fremont Bank and SBA and thinking that's the policy and that's how it is with every financial institution out there. So it really is going to depend on that financial institution and their credit policy. So you want to take that as a one-off, but if you're looking high level, you should be able to look at refinancing into a new note on a new property, pledging that new property as collateral, but it'd be a bank by bank scenario.
And I think the reason I asked the question is what I would encourage anyone here, if you have an SBA loan and you're looking to change, just talk with your lender. Don't try to hide anything. The best thing to do, ask questions. It does not harm you, it does not hurt you. I promise you, the lending institution that you're working for will give you answers. And I think that's always best. Then you have an issue down the road where you've got two SBA loans, two different properties, and like I said, just work with your lender always.
And the other thing I'll throw in there, Darren, for them to work with is you should be having a relationship, an ongoing relationship with a resource partner. So, you got an SBDC advisor, you got a SCORE mentor, you're with the Women Business Center, you're with the Veteran Business Outreach Center. So you have these, and my biggest thing, my biggest takeaway for any public speaking that I do right now is that folks need to realize, small businesses need to realize that every year they're paying taxes. Their taxpayer dollars is what Congress used to appropriate the work that we do here at the SBA. And so you should be taking advantage of your own business consulting firm. And as you're growing and scaling, you're working with a business advisor, you're working with a mentor, and you have someone there to be able to have these conversations with you to encourage you exactly what Darren is saying. Hey, let's now talk to your lender and see where they stand because you have a business plan and aspirations of scaling and moving into a larger facility.
And then one last thing, Eric. So we talked about 504. The 7A loans also are not, passive real estate is not allowed under those loans too, correct? So we talked about one, but I just want to make sure that we clarify that.
Yep, both in general, it applies. Yes. All right.
And then one other thing, there's lots of SBA lenders out there. So we have Fremont Bank, since we have a partnership with them here at the city. Eric, US Bank, there's small community banks that have it. The big banks, if you have a relationship with the banker, call them, ask them if they do SBA loans, but many financial institutions. And Chris, is there a site that people are able to check that out?
Absolutely. Yeah. Thank you for giving me the opportunity to share. Yeah, it's really simple, folks. Just go to sba.gov, G-O-V, and then there you can, in the search on the top right-hand corner, just type in lenders. And there is a platform that we have called Lender Match. And you'll plug in some information and it'll pull up, lenders that your request would be something that they would take a look at.
Yeah, so to build on that, so I always recommend clients or maybe like someone that I met in a chamber event that don't just talk to big banks, go check out your community banks. And because big banks usually have a pretty rigid box that's a lot smaller than the SBA general guidelines. But smaller community banks usually be more flexible, and they will take more like different factors as a consideration as a mitigator on some weaknesses. So go talk to like different sides of the financial institutions.
So, Eric, can I throw something in there, a comment about that? So from the SBA's perspective, we want to minimize the number of rejections or denials that small businesses go through. It becomes very discouraging when you go to the wrong bank, you're asking for the wrong dollar amount, you don't meet their criteria. Again, I'm gonna really encourage folks, get yourself connected with a resource partner like the SBA or the SBDC, SCORE, the Women Business Centers, and VBOT, because they can engage in a conversation with what your borrowing costs, what's going to be your primary and secondary sources of repayment, what does your credit look like, what kind of collateral, what's going to be the use of proceeds. And from that conversation, they can then help you to navigate through what's going to be the best financial institution, or not even the best, but the most favorable financial institution for you to go to, so you don't have to do that headache by yourself. So I strongly encourage, if you're seeking financing, reach out, get connected with SCORE, SBDC, Women Business Center, VBOT, have a preliminary conversation with someone, and they can help point you in the right direction.
Yeah, for Brentwood, it's covered by the East Bay SBDC. Nancy is the executive director, and we work very closely with Nancy.
And the city of Brentwood is partnered with our local chamber, and we're going to have an SBDC consultant in Brentwood here at our community center twice a month through a partnership between the chamber and the city. So that'll be great.
Okay, so let's continue on the slides. We still have quite a lot. So, and other benefits, either no or low prepayment penalty for SBA loans. For 7(a) loans, if 10 years or under, actually, I'm sorry, if it's under 15 years, there's no prepayment penalty can be instituted. If it's 15 years or above, the prepayment penalty is pretty short. It's 5% first year, 3% second year, 1% the third year, and then there's no more. So it provides a lot of flexibility. Future consideration, meaning that we can underwrite using projections. And that's a huge thing, huge difference compared to conventional loan. Conventional loan, we underwrite based on previous history, probably 2 or 3 years of operating history. So it make it really hard for a business trying to get financing for expansion. And that expansion is beyond what their current cash flow can support. So for SBA 7(a), we underwrite using either 12 to 24 months of projected income. So of course, given that projections is reasonable, makes sense, and believable. But yeah, that's possible. Again, it's less conservative in underwriting. So like For conventional, if we are doing a commercial real estate purchase, at least like 30%, 25% for bigger banks. I'm talking about down payments, but for 504, we're talking about 10%. And for 7A, if it's a mature business, sometimes we may not need to have injections. So it can be very different compared to conventional. However, conventional does have the advantage. I'm sorry, go ahead. Someone say something? No, okay. All right, conventional does have its own advantage. It's three very obvious reasons. One is less restrictive use. We don't have to live within the boundary of the SBA SOP, so it's a lot more flexible. Loan amounts, SBA 7A does have a upper limit of $5 million. Conventional, like whatever financial institution has their own limits. Less paperwork because of the government require a set of paperwork, then we have to make sure that everything is like up there and we follow all the procedures. So all the paperwork usually compared to conventional, it's a lot more. So that's the benefit of conventional loans. Any questions?
I would just say, do not let anything scare you. Like, I would encourage you. So as Chris kind of talked about, work with a partner and look, you know, some financial institutions, I've talked with them like, well, don't do an SBA. I'm just telling you, look at all options and you need to find what best works for your business.
Yep. All right. So Darren, can you name an industry not eligible for SBA lending?
We're nonprofits, one of them.
Yes.
Okay.
All right. So eligibility. So first of all, I got a lot nonprofit asking, hey, can I use SBA loan 7A? Like the first answer is no. But Chris, there are some exceptions, especially during the COVID time, right?
Yeah, and you know, for the sake of time, you know, here, you know, to make certain that we cover through the material again, when we want to dive into that, it's definitely worth having a conversation with your financial institution and SBA to find out your particular scenario and situation as a nonprofit. Do I meet any of the exception rules? So I think for that would be the best answer to give to folks.
Great. All right, so another big thing is no illegal business activity under federal standards. So a lot of the states that have cannabis legalized, but under federal standard, it's still illegal activities. So, and SBA is very straight on that. So there's big sections in the SOP, the standard operating procedures, talk about cannabis. So if there's any business that relying on the income, even indirectly from the cannabis industry, then it's not eligible. So illegal gambling, I think in general, gambling is not a activities that SBA can support anyway. So yeah, no gambling business. Has to be small. So we kind of touched it, like what qualify as small. Of course, majority of the business, mom and pop, single owner or one owner with several employees, those for sure can be considered as small. But once you are getting to like maybe millions of revenues and hundreds of employees, then please work with your lenders and to determine if your business can be considered as small. So one criteria is you cannot use the loan proceeds for lending. I got an inquiry from like loan brokers wanted to get SBA so that they can lend directly to their clients. The answer is no, we cannot use loan proceeds for lending. But if it's a loan brokers wanted to open another office, wanted to hire new people, working capitals for the actual operations, yeah, we can support that type of request. No personal use, we cannot reimburse back to owners. Let's say someone started a business and self-funded 100 grand from day one, and then like 2 years later, he wants to recoup his own investment, wanted to get back 50 grand and wanted to get an SBA loan. You cannot do that. Oh, sorry, I mixed up the two. So no personal use, meaning that like probably you cannot getting a business loan to buy a car for your pleasure use. But of course, it's allowable for business use. All right, any
And
questions
Eric,
on this
let
slide?
me have one question from Juan. So Juan, if you unmute yourself, we'll try this again if you want to ask your question. Go ahead, Juan. Are you guys hearing Juan at all?
I don't know. He came in for a quick second. Thought I heard some static, Juan.
Yeah.
Can you guys hear me?
Yeah, we can.
Hello?
Yes, we can hear you.
Yeah, okay, how about now? Okay,
Yes.
now. Okay, yeah, hi, how you guys doing? So, quick question. How important or how necessary it is to apply for an SBA loan if I don't have a business plan? I mean, I've been in business for 12 years, but I never really bothered to write one up.
Well,
Can I still qualify?
Yeah, let me take the first crack, and Chris, if you want to chime in. In theory, if you're a mature business that you have more than 1 year of operating history, most of the time you don't require to have a business plan. Only if you are having a shorter than 1 year operating history, or if you are, and also it depends on the lenders too. Or if you are setting up another location or setting up another a branch, then it may consider as a startup situations. Then in that case, you will need to have a business plan in place.
Okay, fair enough.
Yeah, so let's say for simple thing, if you just want to get a loan for buying new equipment or buying a new real estates for your business, in general, you don't need to have a business plan. Chris, you want to add something?
No, that's perfect. And again, like Eric said, it depends on the bank, right? You know, some banks may want to see that for whatever reason. I'm a big fan and a big believer of having a business plan, because I think it's a structured plan, right? You have a plan. It's not you're just doing it. It's coming from the top of the head. Like, you have an intentional strategy to make certain that your business is thriving. So I'm always going to be a huge fan of that. If you've been in business for 1 year, if you've been in business for 10 years, if you've been in business for 20 years, because every year there should be a business plan to accomplish something. And if you don't have it written down, then it's just, it's just not intentional. And so that's my thoughts. But again, ultimately, the small business is the client of the bank, the financial institution, and the financial institution is the bank of SBA. If the financial institution doesn't require you, neither are we.
And then let me just add one thing. One, you can put together a business plan with no cost. An SBDC consultant will help you walk through that process. They will not write it for you, but they will help give you the tools to put it together. It's not something that takes a long time. And I believe that the financial projections that are included in that are probably items that a bank might be requesting of you anyways. And if you're using QuickBooks or some type of financial system, those you could generate those quickly. So as Chris said, I would highly encourage it, even though it's not required. So thanks, Juan, for the question.
Thank you.
Great. So back to the slides. Is there anything you want to add on this slide, Chris?
No, we're good.
Okay. All right. So very common questions. Does SBA loan require personal guarantee? Or there are questions like, is there any way that we can avoid personal guarantee? The short answer is no. So we want every single small business loan to have the owner stand behind the loan. And very easy argument is if you cannot even stand behind your loan request, why would the bank or the SBA should? So there are some exceptions, but rarely happens that SBA not require personal guarantee. And I can give you one is because if it's the business owned by ESOP, and that's pretty much, I think it's only exceptions that it doesn't require personal guarantee. I still haven't done one myself. Okay, so let's go into the eligibility ownership related informations. So personal guarantee required. 20% ownership rule, meaning that if you own 20% or more of the business that applying for a business loan or SBA loan, then that person will have to guarantee. We do have a permanent residence or citizens requirements. It used to be a little bit more relaxed, but now I think SBA getting a little more straight on that. Personal assets, we do have a credit elsewhere rule. Let's say if you're too wealthy, too liquid, then SBA will question why you still need government assistance on the loan request if you are really can cover it all by yourself. And if the business has assets that more than certain level, then it may also disqualify them to be eligible for SBA loan as well. So a lot of people ask about pledging of real estates. There's a rule for SBA is if the guarantor or the business, when we are doing a undersecure or unsecure loan to a business which their owner owns real estates, then they have to pledge the real estate as collateral if there are 80% equity in that real estates. So you hear a lot people talk about that they have to pledge their home for an SBA loan. That's very common because if they have equity in that real estates, then they will be required to pledge. However, that rule only apply to loan 500,000 or more, and that's the SBA rule. Individual lenders may have different policies. For Fremont banks, usually depending on your requests, and if you do have real estates, we would like to have second position or third positions lien on that properties to try our best to fully secure the loan. But again, it's institution by institution, so you should be talking to your bank directly. Nonprofit owner may be okay. So let's say you have a for-profit company, but there's a nonprofit ownerships in it. It may be okay. Affiliation is a very complex issues within the SBA. Again, if you own more than one business, then we may have to consider all of your business holdings to consider your eligibility for SBA financing. Again, this is something that you need to get in detail with your lenders to determine your eligibility. Any questions? Chris, anything you want to add to this slide?
No, you're right on point.
Okay, so startup lending. Can someone name one single most important factor for startup lending? Darren, you want to take a crack on that too?
For me, it's always been past experience, right? If you've demonstrated the ability to run a business and those type of things, that really helps.
Yep. So SBA financing does support startup lending, although some institutions will say, no, we're definitely not going to do it, right? Some are more receptive in doing it. it all boils down to whether there's a possibility or high chance of loan loss to that financial institutions. And as everybody knows, 80% or maybe even more of startup fails. So for banks or SBA lenders, the guarantee is not 100%. So there's still a 25% chance for SBA 7A that they can have a loan loss. So we still very cautious in terms of startup lending. And yes, we do entertain startup lending. And it's projection based, of course, and 10% minimum injection requirements. Usually, we want to see more, but SBA require 10%. And like what Darren said, experience is the key. So I would give you two extreme. So one is someone that start a business that 3 times already, and every time is successful, and they sold it for a premium price, and they just wanted to get a loan to start the 4th same business. And the likelihood of success is pretty high. And given the experience and given the like the overall strength, then we feel a lot more comfortable. The other extreme is someone first from college and wanted to borrow money to start a restaurant. So it's a very likely failing situation. So we look at experience as the first and foremost criteria for startup lending. So other factors that consider business nature, like what I said, restaurant, it's considered higher risk. So it's not very favorable. But of course, there are like situations require professional licensing. Let's say a dentist or a vet that wanted to, they practiced for a couple of years and wanted to start their own practice. It's a lot easier. That's nature, because in general, those type of industry has a low level of loan loss. Personal credit, of course, it plays a big role. Since we don't have the business history to be leaning on, so we look at the personal history to see if they have a good track records. Net worth and liquidities, that's very important factors in case if the startup having any issues, any hiccup, any roadblocks, do they have additional way to carry the business through those difficult times. And our source of income, of course, if you have a working spouse that bring in like a lot of incomes, and you can service the debt even if the business is a complete failure, that for sure it helps a lot in terms of the credit decisions for startups. And other things that we consider a lot is the use of proceed. And like we will examine like really whether it's reasonable requests for your particular startup situations. And a lot of banks have experience, may not be startup, but in that particular industry, then they probably can bring out their own knowledge to validate, to see if your request is reasonable. All right, anything you want to ask or comments on this slide?
No, Eric, I think we got, let's 5 to 7 more minutes, then we could go to kind of final questions. I know that you have a number of slides, but
sure, we can fight through this. Like Fremont Bank, well, this is more for Fremont Bank advertising. So we are a preferred lender, meaning that whenever people apply SBA 7A with Fremont Bank, we are not obligated to go back to SBA for their blessing. We can make decision on behalf of SBA. So it makes it a little faster in terms of loan originations. more streamlined.
And let me add just something here.
Sure.
Banking is relationship driven. So Fremont Bank is still a family-owned business bank or bank, financial institution. So if you're at a big bank, I won't mention any name, but one of these national banks, and you're going in to get an SBA loan, that personal relationship does not mean the same as what it does at Fremont Bank when you have that relationship with Eric or some of their other folks. So one of the reasons why we have a smaller bank here is I wanted to demonstrate how important it is that relationship with that banking relationship means something for local small community banks versus maybe a large financial institution. All of them can provide you the same amount of resources if they're SBA lenders. However, I think it's important for you to build that relationship and don't just do it when you want to do the loan, do it with all of your banking needs. So the city's not promoting one bank over another, but there's lots of places for you to choose from. And let me tell you, that relationship means something at banks like Fremont Bank.
It does. It does. A lot of times that for loans, if they for a new client that walk into the bank and ask for it, we won't do it. But if you already have a history, we already know who you are and your way of doing business, it make a big difference because that carries so much weight in terms of your personal character. And we're celebrating 60 years anniversary this month. So there's a good reason why we can remain as an independent, privately owned bank, family-owned bank in the Bay Area. So back to the slide, we don't have a lot of time. So number one complaint for SBA lending. A lot of the complaint is the lenders cannot deliver. A lot of bait and switch takes too long. A lot of considerations. When we, and I can speak in terms of a business development person, sometimes when we talk to the client, we know what the limit is, but however, we don't know what the business history, we don't know the business financials, we don't have a lot of things. Not until everything is being submitted and go into underwriting, then a more concrete terms or numbers or loan amounts that we can like really figure it out. So yes, it's a lot of misrepresentations can be like, especially from inexperienced bankers. But please understand that a lot of times that we don't have all informations when we are talking to you in the first place. So that's normal. Even in conventional lending, it happens. Sometimes it's really taking too long because SBA does require a very extensive documentation. So be patient. Again, like if you work with your bankers and or SBDC, they will also help you out in navigating through all the requirements to get the loan funded. So lender selections for big banks. If you are existing business, you have strong cash flow. If you wanted to buy something concrete like real estate, equipment, and if you're not in a hurry, they do the cheapest lending because they have a huge deposit base with a very low interest expense. So if you are a top-notch borrower that you don't really need lending, then go to big banks. But if you are really having a borderline case and big bank already like saying may not be working, go talk to a community bank and they probably can give you a better answers. There are micro lenders, smaller lenders, non-bank lenders out there. And a lot of times for banks, because of the resource constraints, we recommend like loan amounts under 250, sometimes 300,000, going with some non-bank lenders or micro lenders. You will get a better response, faster response. Again, like you can work with SBDC in terms of finding a better match for your loan requests. A lot of them are nonprofits, organizations, and they got grants and having a missions to help small business. So that's why you will get a better response compared to banks, because banks are more profit oriented. Again, like what Chris said, SBA.gov, find a lender. That's an avenue that you can get a appropriate referrals to lenders. So underwriting, I would say that underwriting is like a scale. You put all your good factors on one end and all the negative factors on the other end. If your good factors outweighs the negative factors, we got a deal. So it's not, of course, there are eligibility hard lines, but other than that, like it's an art. There's no set formula. One factors can mitigate some weakness. The ultimate question is how risky the loan is and how likely the bank can lose money. And very fundamental questions, will you invest your own money in that business? An SBA loan is not a VC money, so we cannot really bear a 30% loan loss.
So, Eric, let me jump in. I have a couple quick questions for Eric. Can you talk about, or maybe Eric, you can talk about, does Fremont Bank or SBA lending, do they look at diversity, equity, inclusion, minority-owned, women-owned businesses? Is there any type of preference for that? And could you talk about that?
Yeah, okay, so there are programs, and probably Chris can be a better persons to answer that questions. But in general, for us, especially when we are talking about 250,000 or more, we have to also look into equal opportunity lending. So we don't normally having a preference per se. We encourage, we help, we advertise to minority channels. But in terms of underwritings, we still have to adhere with the same underwriting guidelines. But we wanted to get more help to underserved communities, and that's our missions as a community bank. And Chris, do you want to add?
Yeah, the only thing I can add to that is that, yes, the administrator is very focused on underserved communities, racialized communities, marginalized communities, socially and economically disadvantaged communities. So that is definitely part of our mission. As Eric said, underwriting policy isn't written towards diversity, equity, and inclusion, but programming around that. How do you get to folks to make certain that folks know that there are lending opportunities and financial institutions that are focused on, those different demographics? And so when we talk about it, we talk about, Black and African American, we talk about all the different nationalities, we talk about Native American, Asian American, Pacific Islanders, the LGBTQ plus community. So we're talking about all of those communities.
Great. All right, so I only have 2 more slides, and this only demonstrates how diverse a loan request can be. As you can see, some real estate purchase, some business acquisitions, some refinancing, and a startup of restaurants. And I can tell you that that's a really seasoned persons, and it's fully secure by their homes. And again, the next slides, some more startups and combination. So one feature of SBA 7A is it can be multiple purpose lumped into one single loan. Let's say this one B2B service, you have a refi, you have a new truck purchase, and some working capitals all lumped into one single loan. And that's the beauty of SBA 7A is the flexibility. All right, so that concludes my slides, and I want to open up. Darren, Chris, you guys have any comments or questions?
I think we've answered all the questions that came through the chat. If there's any more, please don't hesitate. If you have a question you'd like to ask, you can raise your hand here. We just have a couple more minutes. I'll fill the time by talking. I just want to thank Eric and Chris once again. For those who are watching live, those who are watching later, Chris and Eric love to help out businesses, right? This is their whole job, right? How can we provide the resources for businesses to continue to grow? And so there's some of those resources that they talked about. There's many other free resources, like as Chris mentioned, SBDC, SCORE, and a variety of nonprofits that are receiving federal funding, state funding to provide the services that you'll need. In my past experience dealing with the SBA, and I think Eric talked about this very well, is you need, if you need something done tomorrow, an SBA loan's not the right program for you. But you can start preparing so that when you are ready and you do need that, just make sure that you give yourself some time. Don't just give yourself 30 days. The underwriting takes a little bit longer. I'm sure that Eric and many lending institutions will try to get you through as quickly as possible, but there is a little bit more time with it. But at the same time, you're not having, the risk is being taken by the lender and the federal government versus all that being put on you in a conventional loan. So, Chris, Eric, is there anything you want to add to kind of end the presentation today?
Yeah, for me, the only thing is that nugget that I shared with folks. You pay taxes, your taxpayer dollars provide funding for the resource partners to support of it.
Great, and Eric?
Yeah, well, like what you said, always open for conversations. Go talk to your bankers. If you don't get a good response, call me. I probably will point, if I don't have a solutions, I will point you to the right directions. I'll pair you up with SBDC. I will point, there are like nonprofit lenders I have direct relationship with too, so I can point you to those directions as well.
Great. So if you stop sharing your slides, Eric, let me just share one last slide on my side. I just want to put up on the screen where you can find this video if you want to come back to it. So here is the website. If you just type in City of Brentwood Small Business Workshops, this will pop right up to the top. Our next one is Business Banking Basics. So if this was a little bit high level for you, the next one's going to be very, very simple, right? You should not be running your business out of your personal banking account. If you want to get a loan, you need to have a business banking account, right? What's an EIN? How do you get that? And what's that process? So we appreciate both Eric and Chris. Ricardo, any final words for us?
No, I hope folks found this be informative. And I thank both Chris and Eric for their time.
All right, well, thank you. We'll sign off and we'll see everybody next month.
Thank you.
Thank you, guys.
Take care, everyone. You're welcome.
Bye.